After researching marijuana stocks for a long time, here is why I think Canopy Growth will rally in the second half of 2020. So it's been 1 year since I last uploaded a marijuana related stock video. I've been covering cannabis stuff for years and here I am again, happy to be back to uploading marijuana stock video content again. Anyway, without wasting more time, let's get to it. So as an investor, I really cannot help but to get excited looking at Canopy Growth at this price again, as I personally believe that stock looks ready for a huge rebound coming into the second half of 2020. In this video, I'll be sharing with you exactly why I think Canopy Growth will rally again. Before that, let's analyze and address some of the Canopy Growth's issues. Canopy Growth under the ticker symbol CGC. To those who don't already know, 2018 and 2019 is all about the hype and promises for marijuana stocks. But today, it is all about delivery, strategy, valuation, and revenue growth. Because of this, marijuana company as a whole are, for the most part, massively indebted, cash poor, and overvalued. While Canopy remains with healthy balance sheet thanks to Constellation Brands, Canopy aren't quite exactly doing as well as they thought it should be due to its poor sales. As we already know, Canopy has rallied from $10 to $50 only to find its way back to $10 range. Evidently, from Canopy's fourth quarter earnings report, Canopy reported just revenues of $79.35 million, drop off 13% compared to its $91.04 million in the third quarter, roughly a net loss of 43 cents per share. This drop in revenues is known to be caused by Canadian recreational market, fallen by as much as 28% due to the lower demand for flowers, pre-roll joints, and of course, the store closure from coronavirus pandemic. Of the 34 stores, 22 were closed until recently. Not only did the coronavirus create some new challenges this year, but the company has entered a new phase due to a change in strategy as a result from its previous incompetent management team. So the question is, why do I still think that marijuana stock will rally in the second half of 2020? Here's exactly why. First of all, Canopy remains the lowest risk in the cannabis industry thanks to its balance sheet. Unlike Canopy, marijuana stocks in general are heavily reliant on debt and share dilution to grow and expand their businesses. As of the end of 2019, Canopy had over $1 billion in cash. From March 2019 to the end of the year, Canopy's long-term debt dropped from $619 million to $394 million. As I mentioned, Canopy needs a better management team as the former CEO of the company, Bruce Linton, focuses too much of its investment on expanding its global reach. Eventually, Constellation Brands recognized that and replaced Linton with the former CFO, David Klein, due to his financial expertise and experience in the beverage arena from Constellation Brands. The truth is, Canopy desperately needed better planning and cost control. In other words, reducing its aggressive cash burn and increasing its profitability rather than looking to expand its global reach. While Canopy has one of the largest global reach in the marijuana industry, the problem, however, lies within the readiness in the global market. This means that the company will have to wait for the global market to mature and accept commercialized cannabis market in order to turn profit. This then in turn will further increase the company cash burn and delay Canopy from the path to profitability. However, the current management seems to figure this out and change its focus to the three biggest and most important cannabis market in America, Canada, and Germany. The company is also restraining production, downsizing the product portfolio, and transitioning towards a data-driven approach. That's why I have all the reason to believe that the transition for the near-term growth will play a huge role in Canopy Growth rally. We all know how big the US market is. In 2019 alone, the US consumer market in cannabis measured to be more than $12 billion compared to Canada's $2 billion market. We are talking about a potential consumer market size worth up to $30 billion in America alone by the end of 2025. That's why it's critical for Canopy to penetrate into the US market. Fortunately, Canopy has actually entered the US market in the late 2019 and launched a line of CBD products like soft gels and oil drops under the First and Free brands. Canopy also has a conditional buyout in place to take over one of the largest multi-state operators in the US. So if the US actually legalizes marijuana, Canopy has an immediate first mover advantage. The obvious sign of the demand and support as well as potential US federal legalization in 2021 or 2022, there's still a lot of growth left in this industry. Honestly, I think that the future remains very promising and I believe Canopy will definitely soar higher. That's all I have for this video. Please still do your own due diligence. Remember to subscribe and hit the thumbs up button if you like the video. Click here for more videos. Also comment down below and let me know if you like or dislike marijuana stock at the current price. Till next time.